Good afternoon, ladies and gentlemen, and welcome to the Trinity Exploration and Production Q4 investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted anytime using the Q&A tab that's situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we would like to submit the following poll, and I'm sure the company will be most grateful for your participation. And I'd now like to hand over to Jeremy Bridgelessing, CEO, and Nick Clayton, Chairman. Good afternoon.
Good afternoon, everybody, and welcome to the Trinity fourth quarter update. We will attempt in this presentation to provide you with an update following the release of the Q4 operational update last week. Our intention is to give you some insight into the immediate focus of the management team and the board. And as we walk through the presentation over the next half an hour or so, I hope that we can address some of the questions and issues around three core topics that have been the result of most of the questions that have been pre-submitted, being Galeota, the timing of the resumption of drilling, and dividends/returns to shareholders. So if we can go to the next slide, please, Jeremy. I'll hand over to Jeremy just to walk through the first couple of slides, and then I'll return to discuss some of the more strategic issues. So, Jeremy.
Thanks, Nick. Good afternoon, everyone. Thanks for taking some time to continue listening to the Trinity story. And to those of you who are new to Trinity, hopefully this will be informative and interesting. We're kicking off with the ESG aspect of the business. And I think the key message that we want to get across is that we've seen the narrative, we understand what shareholders are looking for, and also, very importantly, we've learned through recent discussions with varying financing houses that ESG credentials can actually help you with your cost of capital and reducing your cost of capital if you have good ESG credentials. So tying together ESG and F is very clear. And some of the examples of what we've been doing in the recent times are, given that we are learning about ESG more, we are working together with a company called Sustainable to develop our ESG planning. And they are, in essence, going to look at what we have, identify gaps, look at trying to create metrics that are measurable and comparable to other global standards as we learn more about that space. So it's a process that we are working together with Sustainable on. We intend to release to the public during the closeout of, I would say, quarter two, end of half one of this year, to describe where we are more publicly and talk about the journey forwards as we learn more about ESG and try to implement a plan that is of a world-class standard in the coming year to 18 months or so. In addition to that, the solar irradiance study that we mentioned in previous presentations is about to kick off in a couple of days, actually. And this solar irradiance study will be the first of its kind in the Southern Caribbean, in that it will be collecting data, or a full, complete set of data that has never been collected before. We'll be collecting data at the horizontal axis, diffuse solar irradiance data, and also tracking the movement of the sun during the particular day and days. So the amount of data, the time collection of data, this is going to be a research class project that we are taking on, and will provide bankable data for our technical feasibility in terms of understanding the solar feasibility in the southeast isthmus of Trinidad and Tobago in the Galeota area. Very soon on the back of that, we intend to commence a wind resource assessment, and that will contemplate putting up a 120-meter mast in the southeast isthmus of Galeota, and we are keen to move that forward. The next step for us is to acquire land permissions, and we'll be erecting that and conducting the first bankable wind resource assessment in Trinidad and Tobago as well. So we're breaking a bit of new ground with the solar resource and very soon the wind resource assessments. And in both instances, we're working very closely with the University of the West Indies, the physics department there in particular, and overall growing and developing the relationship with the UE, which I'll come on to a little bit later on. We are also in the final stages of installing a solar PV power system for our WD5 and 6 field office, and this will essentially help us to take that field office offline. It's a pilot study to understand how well it works, how efficient it is, and if that is successful, we'll be looking at carrying this out across more of our installations as we look to reduce the carbon intensity of our lifting of oil. On the social aspect, we are in the process of wrapping up a discussion with the University of the West Indies, where Trinity will be providing funding to the university to help students who are studying particularly in the geosciences area. And this fund, which will help a number of students, will be done in the name of our late chairman, Bruce Dingwall. And in fact, the Dingwall family, who is in country right now, will be visiting with the UE tomorrow, alongside with Trinity, and we'll put together a story and a few pictures to share with you once that's all wrapped up and signed, and describe to you what's happening there in terms of the Bruce Dingwall Fund and supporting students in the geosciences space. Our medical plan now allows private care for employees who have been severely impacted by COVID, and this is a benefit that was not there previously, so that's something that's very helpful given the overall pandemic and the space that we're in. And in recent times, with Trinidad pointing towards getting students back into school, we thought it was helpful to work with the voluntary associations within the areas in which we operate and provide those students with some school-related supplies. So books, copybooks, pencils, pens, rulers, etc. We recently had a drive and helped out around 400 students with that. From a governance aspect, our technical committee is now established, up and running. We have 2 world-class advisors working with us, and a lot of what they will be doing is looking at the organic opportunities that we have, but also helping us with the inorganic opportunities, from making sure that our methodology is correct, but also looking at our risking and ensuring that we are taking a very holistic approach to making the choices going forward. And that will be a key theme that we'll be describing throughout this presentation. The organization structure has been reworked recently. We make sure we've realigned, we've given people who are performing new responsibilities, and importantly, we have implemented an innovation arm. The innovation arm of the business is where the renewables will sit. Also within there, the automation team will reside, and we'll also be putting together a data engineering and data science team as we look to pull together an operational philosophy that reduces carbon intensity, reduces our cost structure, increases predictability of production, and creates a scalable and repeatable solution for operations. Our standing point in the QCA Corporate Governance Code is kept in, because that is important to know that the board and management team and the company is run under the auspices of the QCA. And finally, wrapping all these things up, you can see that financially I've touched on reducing cost of capital, optimizing cost structure, but I think what all of this combines to do is to try and illustrate that Trinity is living and breathing the right types of values that allow us to be a partner of choice. I will touch on some key elements for the 2021 update coming out of the Q4 and the previous quarterly updates that we've had. So I would say from a production standpoint, we held production pretty resiliently at 3069. That is in or around a 7% decline when you look at the production in the fields, particularly the amount of new wells that we have. This level of decline is actually lower than what we would normally anticipate. So the team did a fantastic job in terms of doing recompletions, workovers, and completing the automation of the 31 wells that we intended to do. And this was in the face of headwinds with supply chain, as everybody is well aware of what's happening in the supply chain, but also very much COVID, where we've had a number of waves come through Trinidad, and we have been impacted on the ground in terms of people who have either experienced or come down with COVID, or people who have been primary contacts or even secondary contacts. So it's been taking a lot of time and effort, and the business continuity plans that we put into place have been very successful based on the results that we've seen. I would have to say, the team has been great in terms of taking up vaccinations. Our team overall is 85% vaccinated. In particular, the tier 1 or the employees who are at the wellhead, they are 91% of them are vaccinated, and our contractors are in or around 60% vaccinated as well too. So that presents a good barrier, but we still are, and particularly in this latest Omicron wave, seeing people coming down with the virus, but it's been not very severe, but been light symptoms thus far. Fingers crossed it's been okay, and the vaccinations has helped, but the team have been, I think the key point to take away is that the team has worked assiduously at production. Our cash balance ended the year at 18.3, down from 20.2 in the year before. And I would say, based on the initial data that we have, and we'll of course give more information once the preliminary results are ready and will be sent out. The main movements in Q4 would have been the completion of the PS4 and paying out the remainder of the acquisition payment for that. And then also during the course of the year, our VAT balance, we closed out the receivable balance at $5 million. So we saw an increase in the VAT receivable by $2.1 million across 2021. And this is an area that our finance director, Denver, and his team are working very closely with the Board of Inland Revenue to ensure that we manage our VAT refunds. So that's something that we are very much aware of. It has gone up, but we are also working very closely to ensure that we manage the cash flow for the company in that regard. Operating break-even, the operating break-even has remained below $30, which is exactly what we plan to do. So that was good performance in terms of the cost structure. And I think I would have touched on the average. Sorry, I mentioned the work activities. Other than that, I think the only thing I'd like to highlight is that the realized price is up, and once we provide the preliminary results, you will see what the profitability has been like over the year, and you'll see more detail on the cash balances. Nick, I'll hand over to you.
Thanks very much. Just trying to put some of the strategic influences on the company into some sort of context, and I make no apology really for putting this slide up, which is an adaptation of something which we've shown before. But the key point here is that Trinidad is a mature oil and gas producing region, but there are very significant reserves and resources still to be discovered in Trinidad. It's very much on the government's agenda. They recognize that they've got a short window to optimize the revenues from this resource given transition. And there's also, as you can see from the chart on the bottom left, there's a recognition that the fiscal regime in Trinidad is uncompetitive in a global context. And I think it's fair to say that we're hopeful that we're going to see some visible progress on fiscal reform during the course of the first half and hopefully during the first half of 2022. We've made the point on several occasions that there is a relatively undeveloped independent sector in Trinidad and Tobago. And I would say that the government is very well aware of this, and as a result has tried to, or is trying to, stimulate more activity via the 3 new bid rounds that we've flagged, which clearly is giving us an opportunity as a company to grow our opportunity set. One thing I would say that since I've come on board as chairman is that we have to recognize here that we are a relatively small company. And I think it's fair to say that there's recognition by the board that we probably don't have enough resources in the subsurface to enable us to adequately look at all of the opportunities that we have in a timely fashion. And as a consequence, the board is working with the management team on rectifying that as soon as possible. Next slide, please, Jeremy. So what does this all mean for Trinity? We've had lots of questions about dividends and dividend policy. I think it's fair to say that the board and I want it to be clear to everybody here today that the board is very much focused on delivering not only growth, but also income exposure for its shareholders. But in order to do so, the board's assessment is that we need a step change in the free cash flow to deliver a dividend on a consistent basis. And for this reason, we're all focusing very, very hard and very clearly on two key catalysts that have the potential to move the needle and to get us into a position whereby we can deliver an income stream to shareholders. So there's a huge focus on Galeota, and I wouldn't underestimate the time sink that this involves in terms of management presentations, which take up, you know, the entire time of the team for half days, and then following up questions that come out of the management presentation. So Galeota is a huge time sink for our subsurface team at the moment, but clearly it has a very important, it has the potential to transform the cash flow of the company, providing we can maintain and retain adequate exposure to the asset. So just to be clear, and just to reiterate again, our intent is to retain exposure to the upside on Galeota, fund our corner with minimum exposure to debt, and clearly without having dilution to shareholders. That's the Nirvana equation that we're trying to work with. We have a process ongoing, and we have to work through that process to see what offers ultimately come onto the table subsequently down the line. The second catalyst is NWD. And I don't think we've probably made this sufficiently clear, but NWD is a huge tract of acreage, almost 10 times the size of the 3D that we purchased from Heritage last year. So there's several points here. One, it's a huge area. Secondly, we need to sort of quickly home in on the areas of greatest potential that again would help us to move the needle in terms of the value of the company. We've made it very clear that we're working alongside Capricorn in terms of trying to assess quickly the potential of this block. And clearly the benefits of working with a partner are that we can mitigate the risk whilst hopefully maintaining upside exposure to the upside. So it's quite clear that you know, we both of those processes, which are material and could move the needle, will have funding requirements. And yes, we do recognize that we have drilling commitments that we need to undertake this year. But I think the other thing to say here is that we could start drilling conventional wells at the drop of a hat, but we've said right from the outset that our focus going forward is going to be high angle wells and horizontal wells. And by definition, that's taking slightly longer to formulate the opportunity hopper for wells of that nature. So again, just at the bottom point, you know, I make no apologies for us taking a little bit more time to assess the opportunity, but I want everybody to be clear that the board and the management are certainly not sitting on our hands or dithering on decision making. We're trying to make the right choices for shareholders, and rest assured, the board has got the management's feet to the fire in terms of, you know, trying to speed up the work and to deliver the opportunities as quickly as possible. But the other final point I'd make is that the work program that has been put together for 2022, although drilling will not commence until the second half, it will deliver production growth over 2021 levels, and we'll give more guidance on that in the coming weeks. So that's all I really want to say at this stage. Jeremy, can you kick into some of the detail on some of the strategic initiatives that we're working on?
Thanks, Nick. So I will be picking up on some of the points that Nick mentioned and delving a little bit deeper. This slide is to describe a little bit more about the areas that Nick mentioned, and in particular, the Galeota farm down. We've got a slide on that later on, but we've commenced that process in Q4. So I'll describe that in more detail on the next slide. The NWD onshore bid with Capricorn, that's actually due to be submitted in late March. So we're working, right now the technical teams are working very hard on that and coming up with a number of different opportunities, which I'll describe. And the reform to the fiscal regime, which is expected in the near future. And this comes on the back of discussions that Nick and I have had directly with the Minister of Energy and in discussion with other operators, where they've also heard the Minister of Energy say that the fiscal regime for petroleum will be ameliorated, and specifically for the crude oil producers, this will be looking at the SPT and finding a way to make the SPT go away such that it unlocks value for existing assets and other assets or other stranded assets that need that relief. I mentioned the solar irradiance study, which is commencing in a few days' time. Other than that, the Ministry of Energy has, in terms of the onshore bid round that they'd like to commence, they've asked companies to identify blocks of interest out of a set of 13 blocks that they will put out. And Trinity has looked at with interest and responded on 6 of those onshore blocks, which span the southwest peninsula of Trinidad across to the eastern side of Trinidad. So we are very much looking forward to that process kicking off. In terms of heritage, they are running another process in addition to the NWD, which is called the incremental or enhanced oil recovery for other sub-licenses on onshore acreage. And we've also submitted an expression of interest for that in last December. The capital reorganization you're well aware of, and that has been completed. So that has paved the way both legally and accounting-wise for returns to happen through the balance sheet. So once we have the cash flow stream that Nick mentioned, we'll have the ability to then pay dividends on a regular basis once that cash flow stream is in place. And the 3D seismic interpretation, Nick touched on it, but I will delve deep on it when we get to the onshore slide in a couple of slides down. So what's happening with Galeota? We kicked off a process utilizing Stellar Energy Advisors, and I have to say, Stellar and the team have been very professional, very organized, and very good to work with. Certainly the feedback that we've gotten from parties or proponents into this process is that the data room and the process that we are putting together is very clear, it's easy to follow, and the data is laid out very well. We commenced the process in around mid-December, just before Christmas, and we knew that that would be a time period where people would be a little bit slow in terms of getting into the data room, but we utilized that time to get the confidentiality agreements out to people, sort of negotiated those and got that signed up so that people can get, take a look at the teaser, and then once you've signed the CA, you'll be presented with an information memorandum, and that information memorandum, tells the entire story of the Galeota block, as we have been speaking about before, with respect to existing production, the Project Echo, the Foxtrot and Golf, and also the associated, low carbon intensity of this overall development and what is happening on the onshore facilities, as well as the corporate tax wrapper that is available as well. So that described that, and the next step of the process was for companies to start having management presentations, which is the first interaction between us and the potential proponents. And we've had quite a number of those so far. It's been quite an interactive session, a lot of good questions being asked on the technical and facilities side. And I think that so far the team has been able to come up with good, strong, robust responses reflective of the amount of hard work that we put into this asset over the last 2 to 3 years or so. So that process is going along very well. The team had a flurry of management presentations, as Nick mentioned. That sort of, when you've got a team on a management call, you've probably got about 8 or 9 from our side across technical, commercial. You've got facilities as well to engineering. So it takes a lot of time and effort, but it's something that we believe is very much worth it in terms of the value potential for Galeota that can be unlocked here for the benefit of our shareholders and wider stakeholder groups in Trinidad and Tobago. So, it's a lot of time, it's a lot of effort, but it's something that the team is enjoying. It's something that people are giving good positive feedback on, and the intent is for the completion of the data room review, completion of management presentation should be wrapping up in the next month or so, and then on the back of that, companies will go away and do their evaluation, and hopefully we'll be getting some bids during the course of Q2 of 2022 that we will then assess, and once we take it forward from there based on the quality of the bids that we've gotten through. So we are looking forward to that, and there's certainly the backdrop of where the oil price is, alongside with fiscal change being imminent, and certainly that's going to be a precursor for us before deciding any value change or any value, any sort of reaching financial close on any bid. Are two areas that we hope persevere and they deliver before this process comes to an end, hopefully into the end of Q2, coming on to Q3, and we'll be updating you with the appropriate milestones as that comes along. On the onshore and what is happening here, I think it's very instructive to following on from Nick's point about what we were assessing before versus what we are assessing now. And the graphic on the left-hand side shows where we have our blocks, the yellow blocks with the red rectangle around them. And the red rectangle represents the two windows of the 3D seismic survey that we purchased in early 2020. And the blue outline of the much larger area represents the entire 3D survey that was carried out in 2014. So we essentially moved from looking at the two windows that we purchased in 2020, which was taking a lot of time and effort, and we had a dedicated team towards that, to now looking at what is, that was combined around 37 square kilometers, to now looking at what is about 350 square kilometers. So the size of the survey, the amount of data is significantly increased, and we are, what we are looking at that is for two purposes. One, looking over our existing acreage and increasing the opportunity hopper there by way of wells to be drilled, by way of other techniques such as enhanced oil recovery over our assets. But we're also looking at the NWD area in conjunction with Capricorn Energy there to identify areas of interest. And what the team is seeing is we are seeing structures that have not been yet drilled in the Eocene, Miocene, and the Cretaceous horizons within this particular area. So we've seen a number of opportunities, and it lends to what Nick was describing about saying that in assessing and looking at the opportunity set that we have, we are coming up with more than just the traditional wells that we've drilled, and we are coming up with a range of opportunities that have economic returns that are more robust than our traditional wells. So it's very, we think from a capital allocation standpoint, it's very important that we take the time to assess these projects, look at the risk associated with them, and then deploy capital in the best interest that provides the best return from an NPV, from an IRR perspective, but also a payback perspective to ensure that working capital is managed correctly. So in terms of our onshore drilling considerations, I think one of the key elements that we are waiting to understand is what does SVT look like, and what does the amelioration of SVT mean in terms of the economics for our onshore wells. That's a key point for us because it impacts the economics materially. Then, as I mentioned, we are looking at de-risking and ranking of opportunities. So certainly the seismic has shown us more opportunities than actually showing us that there are less opportunities. So we are taking the time, looking at the seismic, using the seismic to de-risk what we already have. In essence, taking the data points that we have with wells and now applying the 3D seismic with that and integrating that into our mapping. And that is an advanced stage over the existing horizons that we produce from, and those will be the forest reserve and cruise areas. But now we are looking at even deeper targets as well. So what we are coming up with is an opportunity set that contemplates the traditional low angle wells, high angle wells, horizontal wells, and deeper targets within our acreage areas, and for the NWD outlet of that. We're looking at the supply chain. The cost of steel has more than doubled. So of course we want to make sure that when we take on those long lead items, they are at the best prices possible, notwithstanding, because the change in the steel prices has an impact, where they've gone in terms of doubling of steel prices. increases well costs anywhere between sort of 15 to 25%, depending on the depth of the well. So that is material, and that's something that we keep an eye on. We do have some of these tubular and casing on the ground already purchased back in 2019. So that will certainly help and buffer us for the meantime. But we'll be looking at the supply chain, and when the time is right, hopefully capitalizing on steel prices starting to either stabilize or even go down. From a commercial perspective, they're always working together with Heritage to find the best result for both parties. So we'll look at means of, when we start to look at deeper targets or riskier targets, to find the right relationship commercially there that works for both of us. And certainly we are well on our way. We have the opportunity set to resume drilling. We can commence with low angle wells, but I think the key takeaway here is that we want to be able to resume drilling on a continued basis as best as we can, with the right set of circumstances around it, considering fiscal, commercial, supply chain, but also having the right targets that have been de-risked appropriately. In terms of the NWD process and the seismic survey there, I've described what we're doing in terms of looking, at a much larger data set, but that larger data set has now allowed us to put together a more regional understanding or regional set of maps for the deeper horizons, the Miocene, Eocene, and Cretaceous, for example. And that has helped us to identify multiple areas of interest with varying scale and size associated with these opportunities. So those are, in terms of the sizes and scale, have the opportunity to take our existing production onshore and increase it materially. So I think looking at those areas is certainly, another element of why we are very much looking at our capital allocation decisions. There's a lot of technical opportunity sets, and the technical committee will be spending a lot of time with our team to ensure that we're taking the right approaches here, so that when we make decisions as a team and we start to deploy capital, it's for the best return for shareholders. We're working together with Capricorn right now and progressing the technical sessions. As I mentioned before, we have to submit a bid in late March. So very soon we'll be putting together that bid, and we'll be launching that bid in sort of the end of March. And the framework that we put together will also help us not with just screening those other deep opportunities, but it presents us with a lens to look at the areas of interest that we want to operate with onshore, from the onshore bid round and even from an acquisition perspective. This slide tries to wrap up some of the opportunity set that we described in Galeota, the farm down process there, which is an organic one, an asset within. We're hoping during half 1 2022 to get the bids in, and during half 2, if we find the bids are appropriate, working together with the right proponents or proponents to reach the financial close in half 2, and then progress the project and reach the FID during 2023. That's broadly what we are trying to attempt there. In terms of the NWD bid, we intend to launch that at the end of Q1, as I mentioned, and then hopefully we will hear from Heritage, a few months after that, as to whether we've been successful or not. And if we are successful, it's moving forward with the associated work plans that we would have bid on for the NWD. Again, the NWD and Galeota, are both near term, and both present the opportunity to transform this business in terms of production, but more importantly, cash flow. The onshore drilling, given where we are right now and the focus of the technical teams, we intend to resume in half 2 of this year, and that will be across a range of well types. We are hoping to resume with traditional wells, but also include high angle wells, and if we can, deeper drilling within our acreage areas to look at structures that have not yet been tested and potentially enter, if we're successful, enter into virgin reservoirs, which will have much different set of parameters in terms of production. The Tabaquite gas asset, the Tabaquite farm out asset has opportunities in both the liquids and gas. And right now the technical team, once we finish the Galeota and the Northwest District, will be turning their attention to Tabaquite to progress the technical feasibility there. And if that passes muster, we'll be moving forward with Tabaquite. For reference, the Tabaquite license area is in requirement of regularization, and we are working with Heritage and the Ministry of Energy there to regularize that farm out agreement there. And once that technical feasibility looks positive, we'll be moving forward there. So I would say stay tuned for some news later on this year in terms of the potential that can come from Tabaquite. on the West Coast opportunities, and again, showing that we'll be focusing on this in half 2 of 2022. The team has identified a number of exploration, appraisal, development, and infill drilling opportunities across the PGB and the Brighton Marine assets. The intent is to mature these to a technical feasibility perspective during half 2 and into half 1 of 2023, and then do the assessment at that point in time. And if that's positive, it will continue to move forward into half 2 of 2023. So again, that's something to look forward to in terms of news later on into this year and into early next year. The onshore bid round, I mentioned we nominated 6 blocks, and once we hear from the ministry how the process will resume, we will be spending time and effort into embarking, putting our stake forward in the onshore bid round. The shallow water bid round has not yet commenced, but is due to commence, I would say, probably in Q1 of this year. And once we see what blocks are there, we do have some areas of interest already. Hopefully, if there are blocks over those areas of interest, we will also be participating in that process. And finally, I mentioned the onshore IOR, EOR being done by Heritage. We've submitted our expression of interest, and we are waiting to hear back from Heritage on that. And once we hear something there, of course, we'll be in touch with anything that's meaningful. Nick, I'll hand over you to close off.
So hopefully that's given you some insight into where we're focusing our attention at the moment. We're well aware that investors are anxious for us to stimulate activity and get using the drill bit. And I think it's fair to say that we will be. We have a number of firm wells in the budget, and we have contingent wells that will mean that we will be active in the second half. I think it's fairly clear that we have a robust sort of operating position and cash flow, but I think the board is very clear that we need to have a step change in our cash flow generation in order to be able to exploit the opportunities for growth that hopefully we've alluded to, and also return cash to shareholders, or return cash to shareholders commensurate with pursuing those opportunities. In the near term, we've got to focus on the 2 things that are going to move the needle: Galeota, and getting an appropriate, successful farm down is absolutely critical. Because let's be honest, it's highly unlikely that we as a company, the size we are, would pursue this project on a 100% basis. So in order to get the benefit of the value in Galeota, we need to secure a partner and a satisfactory farm down outcome. NWD, hopefully we've demonstrated, is a massive opportunity, and we're working assiduously with our global partner, who's well skilled in exploration globally. So that should give shareholders some comfort that we're going to do things properly and as quickly as we possibly can. We have a medium-term hopper that's already starting to fill, and Jeremy's talked about a lot of those things already. But make no mistake, clearly there are a lot of things in the mix at the moment, but we are targeting growth and we are targeting income. And the board is very, very clearly focused on delivering both to shareholders in as timely a fashion as we possibly can. So I think that's all we wanted to say, unless you wanted to say anything else, Jeremy?
No, I'm fine, Nick. I think you've covered it well. Thank you.
Okay.
That's great. Nick, Jeremy, thank you very much indeed for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while Nick and Jeremy take a few moments to review those questions submitted already, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. Nick, Jeremy, as you know, investors submitted a considerable number of questions ahead of today's event, and I think you previously at the start of today's meeting highlighted that they fell into three categories around timing on offshore, onshore drilling, your view really on about dividends, share buybacks, and Galeota assets, and really the farm down process. And I know you've touched in some detail on some of those, but if I could hand back to you, maybe if there's anything further to add to those three topics, that would take care of a lot of the pre-submitted questions. And then if I could ask you to open up the Q&A tab, and if I could ask you to read out the questions and give a response where it's appropriate to do so, and I'll pick up from you at the end.
Okay, so I think we've hopefully we've addressed some of the questions on drilling. I mean, my sort of the one sort of takeaway I would say on drilling is that the opportunity is great. You know, we are working as quickly as we possibly can on a huge area in terms of developing our drilling hopper, if you like, and we will get back to drilling as soon as we believe that that the time is as soon as we've analysed our opportunities appropriately. So I know there's been some disappointment, but please bear with us. We are trying to do things in the very best interests of shareholders. On dividends, yes, they're coming. You know, the board is very focused on dividends, but we recognise that we need our sustainable cash flow to be at higher levels than it is today. You'll have noticed that our cash balances actually went down in 2021, largely because of an uptick in capital expenditure and the acquisition of PS4. So in the view of the board, we need to move that cash flow needle to a higher level to be able to sustain a dividend payout on a regular basis. But as you've seen in 2021, the one thing we did do is the capital restructuring that puts us very much in the position to be able to deliver dividends when we reach that point. And then the third thing on Galeota, I think just to reiterate what I said in my closing remarks, you know, this is something that we need a partner, and we need to conclude a farm down on satisfactory commercial terms for us as a company, and that will or should, if we retain a sufficiently large interest in the business to give us access to the upside, be a catalyst for a step change in cash flow and everything that brings. So they're the three things I wanted to say. Jeremy, do you want to add anything to that?
Yeah, I think on the dividends element, Nick, you know, what we are trying to do here is to create a predictable set of cash flows that dividends can then be siphoned out from. And I think it's important, you know, whilst we may see the operating cash flow based on the oil price right now, and that's positive, and we're generating good operating cash flow, we're not at the position where the size of the cash stream is such that we can bifurcate it into organic and acquisitions as well as into paying dividends on a consistent basis. And that's also an objective of being able to pay your dividends.
Yeah. Okay, so I'll start reading the questions, Jeremy, and we'll, between us, hopefully we can answer the bulk of them. So Michael C has asked, do you think the authorities will announce reform to SPT regime in H1 2022? I think my response is we're certainly very hopeful that they will, and based on an ongoing dialogue that we have with the ministry, I think you know, we're being led to think that something will be taking place during 2022 and hopefully the first half of 2022. Jeremy, do you want to add anything to that?
Yes, the various bid rounds that the Minister of Energy has embarked upon, particularly the onshore and the shallow water bid round, will require fiscal regime amelioration, specifically SPT for oil, to have occurred if they're going to be successful. And I think the government is very clear, not just the Minister of Energy, but the wider government is clear that without fiscal regime, the investment dollars are not going to come to Trinidad, and they're going to continue to go to our neighbors, such as Colombia, Guyana, and Suriname. I think they're very acutely aware of that. So, you know, we are very much hoping it's a question of when and not if.
Okay, thank you. Colin L also asks about onshore drilling. Seems to be H2. Are there specific reasons for this? Well, I think hopefully we've answered them, but in simple terms, one, the size of the opportunity set via NWD is huge, and it takes a little bit of time to go from 30,000 feet and down into the detail of identifying where the specific opportunities are, and I think we are well on the way to doing that with our partner Capricorn. But again, Colin, just to reiterate, my observation is that we are resource light, manpower resource light in the subsurface team, and certainly the board is pushing management to embellish that team to enable us to get to the targets that we want in a more timely fashion. NWD, David N, is this likely to be split up into several sub-licenses? Jeremy, do you want to just address that?
Yep, sure. Nick, if I may, just on the point of the onshore drilling, I think let me just reiterate that the SVT relief that we've got for the onshore is due to expire at the end of this year. And SVT kicking back in at the end of this year does have a material impact on the economics for the onshore drilling. So having clarity as to where the SVT lies is important before making the economic decision to drill as well. On the NWD question that David N has asked, what we understand so far is that what we'll be working with is in partnership with Heritage across 3 license areas that they hold, which cover the NWD area. We're not exactly sure what the commercial arrangement would look like and the access to the deeper rights, but those are the sorts of things that we'll need to iron out with Heritage before we reach the point of financial close if we have a successful bid.
Okay, thank you. So there's a question from Colin L. Are you able to let us know how far the farm down process has come? I think we've explained that. We've had expressions of interest from a number of players. A lot of them now had management presentations and are circling back with questions. So it's moving ahead nicely, but obviously there's a little bit of a way to go before we get to a point where any offers come to the table. Jeremy, do you want to? I think that's covered it off.
It has, Nick. Thank you.
Okay. David N's asking about the size of the deeper targets in our current acreage and initial views on the chances of success. My only comment there is that rest assured we will communicate that sort of information as and when we're comfortable, and we're working very hard on generating those prospects in order to be able to deliver that kind of information, which I know is close to the hearts of most investors. So Jeremy, do you want to say anything more about that?
No, I think just to give you an idea, a company like Capricorn Energy will only want to partake in something that is of reasonable scale for them. And I would say that reasonable scale for a company like Capricorn will be massive for Trinity. So we are looking at a range of opportunity sets.
Yeah. A question from Afan N. 50% of 22 production is now hedged. Could you please shed some light on what sort of prices these hedges have been put on at, please? Jeremy, do you want to handle that?
Yeah, sure, Nick. Most of these, and I'll give you an idea, we currently have 5 instruments in play. 4 of those are collars, cost collars with either 3-way or 4-way, and 1 is a put spread option. So just by way of reference, the cost collars do limit some upside in terms of upside exposure, but in nearly, I would say 75% of those, the upside is limited from $70 upwards. And in fact, one of them most recently that we put in is from $80 upwards. The put spread option that we have, that is a put at between $50 to $40, and that has no upside limitation associated with it. So what we've done is the primary goal is to limit the downside exposure and allow the capital, the capex activity set that we've agreed to as a board of management team at the beginning of the year pan out in low oil prices. And by low oil prices, I mean in the vicinity of $40. But in order to mitigate the cost of that, we would have sold the upside via call options to make sure that it's affordable. So whilst some of them are out of the money right now, certainly at the point in time when we put these in place, which should have been back in 2021, these are, you know, some of the best options that you could have purchased at that point in time.
Hopefully that answers that question. I've got a question from John C. When will the high oil price, Brent at $88, lead to higher profit? Jeremy?
Yeah, sure. John C, it's happening at the moment. I mean, we are benefiting from increased operational cash flow. It's important to know that, you know, what the Brent price is, Trinity receives a discount to that. And our discount has been in or around 15%, between 13 to 15% of Brent recently. And this is reflective of the type of crude that we sell. And we also commingle with other operators on land in Trinidad and Heritage. And this is then sold by Heritage on the open seas. A good marker for the sort of crude value that Heritage markets is a Vasconia or Mars type crude, which is not a sweet crude, but I would say, you know, probably a heavier crude than what you typically would get from the shale in North America. So we are currently experiencing better operational cash flows with the higher oil price. But again, knowing where the SPT sits for the onshore in particular, and given that it kicks in at $75 a barrel, we're not far off there. So we will look to see what Q1 the average realized oil price looks like. But we are currently at higher oil prices, generating higher operating cash flow.
Nick, Jeremy, I might just jump in there, just mindful of time, and I know that investor feedback will be particularly important to you at this time. Just to say thank you very much for updating investors. Nick, I don't know if it's possible, but if I could just ask you perhaps for a few closing comments, and then what I'll do is I'll enable investors to give you their thoughts and expectations via feedback afterwards.
Sure. Well, first of all, thanks very much for listening. I am aware of the frustration that shareholders are demonstrating because of the seemingly the delays in us getting back to drilling. But I hope that we've given some insights as to why that is the case. And I think it's also fair to say, and I'm just referring to a question that came in from one of shareholder in advance of this meeting, with basically frustrations suggesting that the share price, for all this activity, the share price has gone nowhere. We've got oil price at very high levels, and yet the share price is doing nothing. And I think my closing remarks are that, you know, we are doing our level best as a board to move the needle on the valuation of this company. But clearly, if for whatever reason we can't do this through an operational basis, then we as a board are very cognizant of the fact that there are alternatives to generating value. So we're very confident in our opportunity set. We're certainly not complacent, and I just want people to understand very clearly that the board is not sitting on its hands, and nor is management, and we're pushing them very hard, and the team very hard, to move the needle, to coin a phrase, which will enable us to demonstrate very clearly a growth in value, but also deliver that income stream that I know a lot of shareholders are craving for from Trinity. So that's all I wanted to say.
That's great. Nick, Jeremy, thank you very much indeed for presenting to investors. And of course, we will make all the questions available to the company post today's meeting and make those available should you want to add any additional responses. Could I please ask investors now not to close this session, as we'll automatically redirect you for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Trinity Exploration and Production, we'd like to thank you for attending today's presentation, and good afternoon to you all.